Hey guys, welcome back to Control Z Crypto. So in this video, I wanted to take another look at baked beans. So baked beans has been getting a lot of hype, a lot of visibility lately. Everyone seems to be talking about it. And they've just come out with this new BCT token, which their claim is going to increase the longevity and make this thing kind of tick on for a very long time. So I wanted just to take another look at baked beans, see if my original thoughts about it have changed, and to see what impact I think this new token is going to have on the overall longevity and sustainability of the app. So if you haven't watched my first video on baked beans, it might be worthwhile doing that. I kind of go into the detail about how baked beans works, what it is and what it isn't, in a little bit more detail, but I'll say my fundamental opinion on it hasn't really changed. And I think, look, I'll give the devs credit and a lot of the people who are talking about it. I think the devs are pretty transparent about what baked beans is. And, you know, in my view, it is essentially very similar to the ROI apps that we've seen on this channel that we've looked at, you know, the Matic stakers and all of those. It is an ROI app. It is fundamentally a Ponzi scheme, and it's really important, I think, not to lose sight of the fact that it is really a Ponzi scheme. So we hear a lot, you know, when people are talking about baked beans, that this is a long-term investment. That it's I've heard it said that it's kind of a residual income or a passive income for life, or for a very long period of time. Regardless of how the community and how the devs are recommending that you invest in this, and it could be that 6-to-1 plan where you rebake your beans 6 days a week, you eat your beans 1 day a week, and over time you recoup your initial investment and you start building up kind of this passive income. I don't disagree that works to an extent, but you just can't lose sight of what this is. It is fundamentally a Ponzi scheme like the other ones that we've had a look on this channel. But it has some benefits and it has some interesting features to it. And one of those interesting features is the fact that the amount that you get back, your return is dependent on how often you rebake these beans. And I mean, to be clear, when you talk about rebaking the beans, you're not actually putting more money into the contract. You're not increasing that contract balance. You're not putting more BNB into it. All you're doing is you're increasing your stake in the pool of virtual beans. Let's call them. They're not really an asset. They're just a virtual kind of variable that sits on this contract. You're increasing your stake and you're increasing your eventual returns in the future at the cost of being able to take out money in the short term. So it's an interesting feature, and the way this operates does reward people who don't kind of play the short term game and just try to extract as much value as they can. It does reward people who delay their returns, and that's interesting. And I think obviously doing that does have a great impact on how long this thing is going to stick around. But having said that, I mean, just think of this situation that basically all of these apps, all these ROI apps, these Ponzi scheme type apps, the way that they're structured. So essentially, it's a situation where everyone gets together in a room and puts their money on the table and says, "Okay, so this is all the money that we're going to be investing in this app." And in the case of a standard ROI app where you've got a 14-day lock or whatever it happens to be, a daily return, people are basically just taking their returns off the table every day. And eventually the money's going to run out, you know, very quickly. Might be 3 days, might be 14 or 28 days, depending on how long it hangs around for. With baked beans, it's a little bit different. Everyone's still walking into the room, putting the money on the table, and saying this is the investment, this is the contract balance. But they're also agreeing, well, how about we just take a little bit less out each day? So we'll take a bit less out each day. We'll let our virtual beans compound, and down the track, we'll start taking more and more out. So instead of the payback period being the standard 13 days on a lot of these ROI contracts, we get the payback period, the return on investment, being around 6 weeks for baked beans, and that certainly does make it last longer. But really, it's the same thing. It's the same thing as these other Ponzi schemes, these other ROI apps. There's no extra money coming into the system. We'll talk about the BCT token in a minute, but just taking the app at face value, there's no extra money coming into the system. So all of the games that you play about how many, how many times you rebake and how often you kind of compound and when you actually get your return back, it's all adding to the longevity, adding to how long in physical time this lasts. But it doesn't really change that fundamentally all that's happening is everyone is putting their money onto the contract. And the only money that's coming out is the money that people have put onto the contract. It's that standard Ponzinomics that we've seen again and again. And nothing really changes that. So if we have a look at, I wanted to have a look at the contract for baked beans, because people are saying, hey, this thing has been around for months. It's really sustainable. The way that this has worked, the whole delayed returns and people, the community following this 6-to-1 plan has really resulted in a long-lived app, and this is kind of sustainable. It's going to be around for years, or it's going to be sustainable well into the future. Look, let's take a look at the contract balance. This is the curve on BSC scan. If you go down to the contract, if you look at the analytics tab, you can see this contract balance go up. Just remember that this contract balance has nothing to do with people reinvesting, rebaking their beans. It definitely goes down at a slower rate that when people rebake as opposed to when they make a withdrawal. So when they rebake their beans, all they're doing is increasing the number of virtual beans that they have in their wallet, which then in subsequent periods increases the amount of rewards they can take out each day. But it doesn't do anything to the contract balance until you actually hit that eat beans button, right? So the contract balance has not been going down quickly because people are taking longer to get their money out. But the really important factor is this contract balance going up. And the reason it's been going up is that more and more people have been investing in baked beans. And, the more people invest, the greater that contract balance. And that's obviously a really healthy thing. And this thing could be around for a long time based on the number of people that are investing and based on the fact that this whole reward structure, this 6-to-1 reward structure that they promote, absolutely does take a longer time to pay back your return on investment than other Ponzi schemes that we've seen, where it's generally around about the 13-day mark that you get your initial investment back at 8% daily interest. So this is definitely around for longer, but is it fundamentally different from any of these other Ponzi schemes? I would say absolutely not. It's not. There's no other money here apart from just what people are applying to that contract balance, driving it up. And at some point, we're going to see the same thing happen. It's going to drive up, and then people are going to start those compounding returns in baked beans. When these bean amounts start getting very, very large, the amount that people kind of take back weekly gets bigger and bigger, and eventually it is going to drain, and it's going to run out as the same way as all of these others do. There's going to be winners and losers, and definitely I would say baked beans is one where if you got in really early, you're going to make an absolute pile of money because you're compounding and the value of your beans is constantly getting bigger. You're pulling out these weekly returns, or maybe you're racing, or you're kind of doing even more payouts than they recommend, and you're making even more money. And definitely, if people keep adding money to this and people keep investing, this is going to go up, and you're going to make an absolute ton of money. So, but that's the case with any ROI app that has this following. So, this kind of investment level, and this is going to run out at some point. At some point, the hype is going to drop down. People are going to this will flatten, and it'll start to drop just like any other ROI app. So, that's not to say there's nothing to baked beans and that it's not an interesting app or it's not profitable. I would absolutely say there's a high likelihood for profitability here, especially if you're already in baked beans. With all these ROI apps, the longer you take in the app, the later you are, the worse off you're going to be, and it's going to hit some point where, like, you can imagine people who have been in this since February, and daily compounding, and the contract balance is going up, and in a couple of months, these people are going to be pulling massive amounts of cash out of this contract balance, and it's going to drop pretty quickly, and that is really hard to change. I mean, that's just the nature of, compounding these daily bakes, increasing your expected earnings, and not cashing them out till later. There's no way to avoid this. It's kind of a closed system at its core. So I just encourage anyone who believes that baked beans is somehow different, in fundamentally different, in that it's not a Ponzi scheme, and there's some kind of way that just if everyone does the same thing, and if everyone does this follows this 5-to-1 thing, it's going to last forever. It just can't last forever. The maths proves it can't last forever. You can't just take the same money, put it in a big pile, and then start taking bits out of it and expect that it's going to last forever. It just doesn't work that way. So just be realistic about what baked beans is at its core. So having said that, what is refreshing is that the if we have a look at, I think it was the one of these white papers, this light paper. I think they do call out minor smart contracts or reward pools have been known as Ponzi schemes and are regularly dismissed by investors. So look, I think that they're not hiding the fact that that this is a Ponzi scheme, and this operates the same as any other Ponzi scheme fundamentally. But I think a lot of people that have invested in baked beans, or that listen to the hype and the kind of the marketing around this and what everyone is saying, I don't think that a lot of people are aware that this is just another Ponzi scheme with a few degrees of complexity added to it to make it last longer, and it will last longer. But don't kid yourself. This is not going to be any kind of passive income for life plan. So that's my take on baked beans at its core. So that hasn't really changed since my last video. But I wanted to take a look at basically this new token that they've come out with, and to see if there's any impact to the essentially the longevity of the contract. Because basically, if you read through all of this information, what they're doing is they're saying, all right, they're introducing this new BEP20 token, so a token that sits on the BNB, or sorry, the BSC chain. And essentially, when you buy this token, there's a 12% tax that immediately comes into place. So you buy a number of tokens, 12% of that value you lose immediately. Some of that goes to developers. They always call this, marketing, whatever. Some of it goes into the liquidity pool. And then this critical 5% goes back into the baked beans miner. So that hits essentially this contract balance. And the idea here is that if you can get people to buy these BCT tokens, you can put money back into that contract and keep the contract going for longer. So it's no longer this closed Ponzi system. You've got money coming in from an external source. So, at its face, you look at that and think, okay, well, that's interesting. It could increase the longevity if you get this good take up of this BCT token. If people see value in the BCT token, if people see that there is money to be made on this token, otherwise, why would you buy this BCT token? I'm not going to go into the allocation and how much is actually, the team is taking a cut of these tokens. There's some allocated for the private sale. There's some in the liquidity and staking pools. This is fairly standard stuff. But what I'm really concerned about, or thinking about here is, well, A, what's the value for the investor in BCT? Is this something people are going to want to buy? And B, is this actually going to prolong baked beans as a platform for longer than it would last otherwise? So, look, and sorry, just to add that there is also the sell tax as well. So you're paying a tax on both sides. Buying and selling, 5% of that goes back into the contract. Now, look, I'm going to look at the value proposition first, because I don't think there's much of a value there. I've spoken about my view on ERC20 tokens, or in this case BEP20 tokens, and whether they hold any real value. I mean, my view is that they don't. There's no real value in a token, just at its core. Like, you can take a token, you can throw via a few dozen lines of code, stick it on the chain, and you've got yourself a token. That doesn't mean anything. Where the token starts having value is when people are buying it, and then you have some of that value that sits there in the liquidity pool. Essentially, that when you sell the token, you can recoup some of that value back from the liquidity pool. And we've seen essentially a constant feature of a lot of these tokens where there's no real the value to them. The price just constantly trends downwards, and that's because the only real pressure is sell pressure. If you're buying tokens, staking them, and the only objective is to sell them, the sell pressure is always going to be greater than the buy pressure, because for essentially, you buy a token for, let's say you buy it for one one BNB, and then your returns after you stake it and you mine it, or whatever it happens to be. Say your returns are 1.2 BNB, so you are always selling more than you're buying. That's how they work. They're always kind of increasing the amount of returns. And so they constantly go down. We see this for farm tokens. We see this for any kind of tokens. It's because there's no fundamental value in those tokens except just to create more of those tokens, only to be sold. That, in themselves, and I might do a video on this at some point, just looking at the Ponzonomics of tokens, because it's a really similar process. That the only value that is in these tokens comes from external to the system. It's people buying the tokens, putting value into them, and there's no actual, regardless of what maths you put into a token to make it yield more tokens under certain conditions, you cannot just create value out of nowhere. You can create an increase in the price of the token if a lot of people buy the tokens, and we may get, because there is a strong community behind baked beans and a lot of people willing to invest, a lot of people really hyped over this platform. We might see a lot of people buy a BCT token and invest, and the price go up and all that kind of thing. But long term, we're going to see the price go down. I mean, let's take a look at. I'm not going to read through this whole light paper. I think I've spoken a little bit about it. Here's the site where basically you can stake your tokens. Here is the price of the token. So as you can see, it does go up, as these always do in the short term, because people are buying. Early on, the buy pressure is driving the price up as people are buying them. But later on, as the amount of holdings increases, people start selling them, and the sell pressure kicks in, and we see a lot of price drop further down the line. So there's two sites you can buy these on. They essentially two liquidity pools, one on PooCoin, one on PancakeSwap. And essentially, as I've spoken about before, in my view, that's where all the value is, in these liquidity pools. The fact that people have bought into these tokens. There's no there's no exchange value to these tokens. There's no external value that people are willing to pay apart from what's in these liquidity pools. So I just don't see any kind of value that you can get from just simply creating a token and saying, hey, if you stake it, I'll give you more tokens. It's just the value isn't there. The economics aren't there. If you get in early and you can manage to make a profit while the price is going down, and sell kind of for a profit early on, absolutely you can make money doing this. And a lot of farms have very profitable openings, and as time goes on, that price just keeps dropping and dropping and dropping, and people who are getting into it a bit later only see losses. And again, that's the Ponzonomics kicking in, and I don't see anything different here. If you go to the staking, you can stake your BEP20 tokens, your BCT tokens, and you can get some rewards. I presume that these are simply more BCT tokens that we're talking about, not a second order of tokens. It looks like it's just more BCT tokens. So that's why you get essentially buy pressure from people buying these coins initially, but as these tokens kind of develop and you get more coming out of the system, the price starts to progressively drop, and there's no more buy pressure. So for me, I wouldn't invest in any random token like this that's saying, "Hey, buy some tokens and I'll give you more tokens." It just doesn't make sense. There is a risk proposition that can be made early on, and you may make some money out of this potentially, but I just don't see the value there for investors. From what I've seen so far. So the flow on then is what does that mean for baked beans? So remember, 5% of the buys and the sells of this token are going on into baked beans, and okay, that's great, but I I wouldn't say that's going to have any impact at all into the longevity, and the reason is really the volume that we're seeing here for baked beans. So that's USD balance at the moment of, well, what is that? 2.4 million dollars in BNB. I'm not sure if I'm reading that correctly, but it says 3.2 up here. Um, so I mean, regardless, it's a huge amount of money that's invested in baked beans, and it's by the shape of this graph, it's only increasing. And at some point, all that's going to come due, and I don't think that the volumes that we're likely going to be getting from this new token are going to put any kind of dent in it. Yep, they might add, I don't know, 100,000, 200,000, but is that going to change the shape of the payouts that we're going to see? We've seen curves for other ROI apps. They go kind of up and then they peak and then they go down. Once you start going down, just that curve gets eaten up so much, that balance gets eaten up so quickly that a few 100,000 or anything on top of that, it's not going to make a significant impact. And I could be wrong about all this. This is absolutely not financial advice. It's not this is my first impressions. This is looking at the contract. This is looking at what they're saying about BCT. I just can't see. I just don't see as an investor in BCT, if I wanted to buy some of this, I just don't see how I'm expecting to make my money. So first of all, I'm losing 12% when I buy, and I'm losing 12% when I sell, and I'm expecting somehow to make money staking these tokens, even though the price is likely to start dropping once the buy pressure evaporates, and you're expecting other people are going to buy these tokens when they're losing that basically 24% of their investment, 1/4 of their investment straight away. So I just don't understand how that is a good proposition for anyone wanting to invest, unless they are, really into baked beans and they love the contract. They think it's amazing, and in my opinion, I think it's the only reason is that you're kind of misguided on what the whole thing is. It's not to just kind of drive the point home too much, but it's a Ponzi scheme. Like, just be honest with yourself about what it is. It's a Ponzi scheme. It's the same as all these other Ponzi schemes. It will last a longer time, and that's what it is. It's not a wonderful lifetime return that you're going to get from this. It's the same as all of these are fundamentally, and the end is going to be the same. At some point, there's not going to be enough new people coming on, putting their money into it to sustain the contract. It's going to run out. Some people are going to win. Some people are going to lose. I think that's not to say, as I've said before, that's not to say that you can't make money. And if you made money off this, great. I've made money off baked beans. For full transparency, I think a couple of weeks ago when I released my video, I put some money into baked beans, and since then I've made that money back, and I'm going to be making some more returns off it. So it can be profitable. And I think that, it's very likely if you got in today, if you were kind of withdrawing more frequently that they're recommending. So I'll show you what I did, just, for the sake of transparency here. So this is just a summary spreadsheet. The initial investment I made was on the 20th of March. So we're now about 2 weeks after that. And I was just experimenting with different ways of, rebaking. So this is rebake, rebake, withdraw, rebake, rebake. I missed a day here and withdraw, rebake, 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 withdraw, rebake, missed a day and then withdraw. And by that, 2 weeks later, I've made 102% return on my investment. So I'm in the black. And from here on, I can experiment with different ways of rebaking and withdrawing. And I know that long term, I would expect to get much higher returns if I was doing the 6-to-1 ratio of rebaking 6 days and 1 day of returns. Look, I'm here to control my risk and make sure I get my payback as quickly as possible, and from here I can play with house money and get some good returns. So I think, look, even if you're late now, it may or may not be too late. You could still get into baked beans and you could still take returns quicker than they're recommending and make some profit that way. I'm definitely not saying that baked beans can't be profitable. What I'm responding to is just this kind of Pollyanna-ish view that is somehow this kind of holy grail sustainable app that it's not. Just always keep in mind what this is. It is a Ponzi based app, and as far as Ponzi based apps go, it is definitely one of the better ones. It has some measures in place to keep it going. I know a lot of people love to talk about the community and the developers, and it's got great community, and everyone seems to love it. I I don't I don't put much faith in communities. I don't invest in communities. I invest in contracts and apps, and I look at the numbers because we've seen so many great communities just disappear once the whole thing falls over. Time Wonderland, Stable One, Multimatic, great communities. Lots of people saying the community is wonderful. The devs are wonderful. And then, of course, when the inevitable happens, those communities just disappear, the devs disappear, and it's as if nothing ever happened. So I don't put any faith in that kind of stuff. But having said that, great community. Everyone seems to believe in it. I would think it has definitely more sustainability than a lot of similar apps. There's a lot of opportunity to make money, even at this late stage. I would say, if you were to get in, there's a very good chance that if you're taking profits at a more frequent level, that you'll make your money back and even a little bit over on the top. If more and more people put money into this thing, it could last a very long time. But all I'm saying is don't kid yourself and think that there's some magic happening here for it to be sustainable forever, because there's no magic. The only reason it's sustainable is because so many people are putting money onto the contract, and we have this 6-to-1 thing that they're promoting, where essentially you delay your rewards until further down the track, and if you follow that 6-to-1, your payback period is 6 weeks. So that's 6 weeks from when you put money in to when you get your investment out, and then from then on it's pure profit. So it's that 6 week duration being so much longer than the usual 13 days that we see for other ROI apps. That's what's causing the sustainability, along with the increased investment. There's no magic here. It's no magic beans. It is basically the same Ponzonomics as we've been seeing before. So that's all I want to say at the moment on baked beans. If you're investing in baked beans, best of luck. And as I said, I'm investing in baked beans. I'm in here, but I just I'm happy to promote it and say, look, it's definitely something worth looking at and something where you could make money. But I don't want to be. I want to be a counter to some of the voices who basically are calling it just the next best thing and such a great long term investment. I just want people to exercise caution. I want to keep it be honest with people who are watching my videos, to be honest about what I think, and you need to be aware of what you're investing in. So all that being said, I appreciate you watching the video, And if you do think I've gotten anything wrong, if you have any views on this, just drop a comment in the comment section, and I'll see you in the next video.